You're not going to believe the cover-up that big banks and corrupt politicians are doing to keep the masses away from Bitcoin. It goes something like this. Elizabeth Warren calls a press conference and starts accusing everyone in crypto of climate terrorism. Why? Because Bitcoin is destroying the environment. Quick, run and sell your Bitcoin to BlackRock. And once you do that, go tattoo ESG on yourself and start paying off your carbon debt, you dirty little degenerate. No, Elizabeth Warren has not gone that far yet. And these are the kind of crazy headlines and propaganda that get pumped out about crypto's climate impact. So today, we're gonna be busting some of these carbon credit myths. And in fact, I'm gonna tell you why I believe Bitcoin could hit $657,000. It's time to discover crypto. In this video, we're going to focus mostly on Bitcoin because it's the traditional climate boogeyman. But what if I told you that boogeyman is the exact reason that Bitcoin is going to surpass these exponential numbers? When you hear Cathie Wood talk about $1 million Bitcoin price action, where do you think that number comes from? Because it's not out of thin air. Well, almost, and here's why. First, we need to compare the climate impact of TradFi and the crypto industry as a whole. Now, in order to properly understand Bitcoin's climate impact, we have to understand that it's a store of value, and a payment method, and a currency. I'll be comparing Bitcoin to the carbon footprint of commodities and the stock market, as well as the banking system and credit cards. Then I'll talk a little bit about the cost of maintaining the US dollar as a world reserve currency. Number one, a store of value. Since Bitcoin is often referred to as liquid gold, we need to start there. Gold produces a bit more carbon than it did when miners were running dirt through sieves back in the day. Now, as of right now, the World Gold Council estimates gold is responsible for about 0.4% of the global annual emissions, putting over 126 million tons of carbon into the atmosphere every single day. To put that into perspective, that's the same as carbon emissions of Syria and the Dominican Republic, which as of 2019 were ranked 76 and 77 out of the 209 countries across the world. Now let's look at silver mining, which contributes less greenhouse gases than gold per year, around 13 million tons. That's comparable to Cambodia and Slovenia, which are ranked at 98 and 99 respectively. But what makes mining real-world commodities different than mining Bitcoin is that besides just the carbon emissions, they take a horrendous toll on their surrounding environment, destroying landscapes and entire ecosystems. Plus, mining contaminates the water supply. Now, if you're like, hey Joshua, I'm perfectly fine with living in a treeless society, you may want to think about that again. You see, overexposure to heavy metals has been linked to antibiotic resistance, birth defects, immune dysfunction, cancer, and many more health problems. So when you think about it, we most likely can't calculate the untold impacts of mining on our health and ecosystems. So here's why you're gonna wanna hodl your Bitcoin for a very long time. Because the actual emissions of crypto are much different than people like the IMF want to make it out as. You see, while Bitcoin bears have a hard time estimating them, I'm gonna give you a few numbers to take with a grain of salt. In 2022, the White House released a study stating that the crypto industry as a whole emits around 0.3% of global greenhouse gas emissions, or around 30 million metric tons of carbon dioxide every single year. With Bitcoin accounting for somewhere between 60 to 70% of this, that would put Bitcoin somewhere between 18 and 23 million tons of carbon emissions annually. That same year, researchers at the University of Cambridge estimated that Bitcoin mining emitted almost 200 million tons of CO2 since it launched, which would put it at a little over 15 million tons per year on average. Now, I know there's a lot of mumbo jumbo, but I promise you these numbers are gonna matter in just a second. Because at the end of 2023, the UN put out a very fear-mongering study comparing Bitcoin carbon emissions to burning 84 billion pounds of coal or operating 190 natural gas-fired power plants. Wow. You see, they didn't list the actual carbon emission numbers, probably because they knew it wouldn't be as scary as they wanted it to sound. I'm not going to try to convert their strange comparisons to actual tonnage, but if you're feeling like a climate math warrior, leave a comment below and tell us what the climate impact actually is. Because the moral of the story is none of these numbers are more than mining gold. Because although Bitcoin does consume water and take up physical space, it has nowhere near the ecological impact. Now, let's compare Bitcoin really quick to the traditional stock market. I looked through the bloated sustainability reports, and the NASDAQ was very excited to announce it met net zero emissions, and the New York Stock Exchange is also supposedly reducing its emissions itself. But the crypto industry spans many companies, so is this actually happening, or are they faking it? Well, let's take a little closer at these companies. In 2021, the center of American progress, and the Sierra Club published a report that found that 18 of the largest banks and asset managers were responsible for emitting almost 2 billion tons of CO2. If they were a country, they'd be the 5th biggest polluter in the entire world, ranked right below Russia. Now, the Sierra Club put out a statement urging people to take action against Wall Street, but of course, the horrible environmental impact went unnoticed. Then, Bloomberg put out a report around the same time saying publicly traded companies are responsible for 40% of climate warning emissions. And that's just American companies. Greenpeace and WWF released a report estimating the UK financial sector is responsible for almost 2 times Britain's annual emissions, coming in at 800 million tons of carbon dioxide. Now let's get to number 2, because Bitcoin isn't just a store of value, it's also a payment method. So let's compare banking and credit card sectors to Bitcoin as well. The banks were already included in the 1.9 billion emissions from the report I just mentioned. You see, banks seem to actually be more interested in fighting the hit to their public personas than actually changing their investing habits. However, they've won the battle. Surprise, surprise. You see, they only have to disclose 33% of their actual emissions linked to their capital markets business. So where's the other 77%? It beats me. Because even without that disclosure, banks with their transactions and physical infrastructure already have a pretty big climate impact. This is a chart from 2022 of bank emissions in 1,000 tons. This means JP Morgan Chase alone, without taking into account its investments, has a higher climate impact than Hong Kong with its 7.4 million citizens, and over triple the negative impact of the entire crypto industry. But what about credit cards? We haven't even gotten there. At the end of 2020, there were about 3 credit, debit, and prepaid cards for every one of the 7.9 billion people on this planet. That's over 24 billion cards, a number which has increased exponentially due to tough financial times. The government's telling us that inflation is down, but the 99% of the population that is fighting the 1% is actually maxing out their credit cards, taking on more debt, and getting a second or third job. Whoopee. So not only do we have the emissions created for mining the plastic for these cards, and the subsequent waste left behind when you cut up that card and it ends up in a landfill, but then you also have the energy it takes to simply ship them to consumers and run transactions. Meanwhile, crypto is digital. It has nowhere near the physical waste associated with TradFi. MasterCard estimated 600 million credit cards are produced every single year. So based on these numbers, credit cards are responsible for a whopping 90 trillion tons of carbon emissions annually. And that isn't even taking into account the impact of the card company offices, their data centers, ATMs, and all the other financial infrastructure. But still, Bitcoin bears love to bury their heads in the sand, comparing Visa and Bitcoin transactions in some sort of weird morality contest. Yes, Bitcoin's proof of work energy system is of course intensive, and a lot of mining is done in China with dirty energy. But unlike a Visa transaction, a Bitcoin transaction isn't just an exchange of funds. It's about securing the blockchain, maintaining decentralization, and bringing new Bitcoins into existence through block rewards. Plus, there's a consistent innovation to make Bitcoin more scalable and energy efficient. For example, the Lightning Network represents a potential groundbreaking solution, as well as all the other Bitcoin DeFi and Layer 2 protocols being built out today. You even most recently had Marathon Digital, the largest or one of the largest Bitcoin miners in the world, backed by BlackRock, the largest asset management company in existence, launch their Slipstream service to support inscriptions and ordinals on their platform, as well as launch their own Layer 2 and 2 additional Bitcoin sidechains. You think this is a coincidence? On one side of the equation, you have BlackRock targeting ESG and telling everybody that you need to be better for the environment. Meanwhile, all the investments in their bankers and all their elitist friends, while they tell you that Bitcoin is bad for the world and that you should sell it, they're launching the greatest financial digital product to ever exist, which is a Bitcoin spot ETF. Not only profiting off the retailers' bags who are selling into the institutions, but now also making money off every single Bitcoin transaction in existence. It's genius. Now, on top of this, Bitcoin miners are actually making a huge transition to complete green or renewable energy. You see, while Bitcoin does, yes, take up a lot of energy, it's using a lot of the poor infrastructure that's been built over the last 100 years, sustaining things like power grids in Texas. Kazakhstan is now making investments into this. You have Oman actually investing over $1 billion into Bitcoin mining. Then, of course, you have the World Economic Forum even coming out and displaying this video. As you can see, this chocolate factory is powered by a net zero Bitcoin mine. Both are in Virunga, Congo, Africa's oldest national park, and this 7,800 kilometer area is home to more than half of Africa's terrestrial species. and it's the first national park in the world to own a Bitcoin mine. The mine is powered by clean energy from Virunga's 3 hydroelectric power plants. Its excess electricity is used by the factory to produce cocoa beans, while the Bitcoin it mines pay for the salaries and infrastructure of local community members. The chocolate factory trains and employs all these local workers, and with priority given to the widows of rangers killed while protecting the actual park. It enables local farmers and workers to extract the full benefit of their cocoa crops.
We're in one of the greatest cocoa producing areas on Earth, but like so many things in Eastern Congo, it's picked and then exported to foreign countries, and all the added value of cocoa, which is enormous when you produce chocolate, are really lost to the Congolese.
So as you can see, there's actually a ton of positive and value to Bitcoin mining. Now I want to be clear, I'm not coming for your gold, stocks, or credit cards here. Get that bread however you want. It's supposed to be a free market. But unless you're willing to forego every modern financial institution in your attempt to go green, crypto may actually be one of the least harmful investments you can make. The question I want you to ask is, why does crypto have a climate-killing reputation, when as a whole, our industry emits a minuscule percentage of the carbon emitted by US financial sectors? Well, the answer is simply, it's all FUD. FUD designed to manipulate markets and trick you into selling your bags. Now, this very well could be because of number 3, which would be currency. You see, dollarization allows the US to run up massive debt, enjoy cheap interest rates on all of our loans, and never worry about a currency collapsing because the world has to use it as a reserve currency. But the biggest reason the US fights to maintain the dollar as a world reserve currency is that it gives us extreme political leverage and influence, which is why they hate Bitcoin. It's decentralized geographically. Doesn't matter if you're a second or third world country, any country in the world that has access to any internet, as well as just some energy source, can mine and produce Bitcoin. See, dollarization also provides the US with a non-military instrument of coercion with the police international order. Coercion is a nice way of saying the US has the power to decimate the economies of other countries we may disagree with by simply implementing economic sanctions. Remember Iran in the 2000s and how there were specific weapons of mass destruction that we could never find? You catch my drift. All of this has led economists to wonder if the weaponization of US dollars will lead the countries holding less of it on their balance sheets. If the world would de-dollarize, we could see the depreciation of the value of the US dollar, an increase in import costs into the US financial turbulence in nations that hold a large amount of US debt. And of course, this could mean we will start to see more countries like El Salvador start to store their value of their country in a currency such as Bitcoin. Now, of course, I don't believe there's going to be an estimation on time frame of de-dollarization in the near future. This is something that takes decades to unfold. But what do you guys think? Will Bitcoin replace the US dollar as the world reserve currency in our lifetime? Make sure to smash that like button, leave a comment below, and tell me what you think. Also, let us know if you'd like a follow-up to this video, as it goes into how Bitcoin mining is subsidizing green energy initiatives, because that is where the value of a $657,000 Bitcoin comes from. See, not only can you compare Bitcoin to gold mining, or the financial sector, or the currencies, Bitcoin's marginal cost of production is only going to increase and is able to tap into the negative energy markets, emissions that are formed from companies like your oil giants, which are flare emissions. You may have seen this image. These flare emissions are what are producing massive wastes of energy in our world. There's no way to capture them. They're just going to continue to overproduce and meet their quotas. And that's where Bitcoin mining comes in. It can reduce all of those carbon emissions, all of those CO2 emissions. It can tap into landfills. Yes, landfills are producing tons and tons of emissions. And over time, I believe we're going to see more states and more countries and more nations start to adopt Bitcoin mining and convert all the wasted energy in the world. We're talking hundreds of billions and trillions of dollars in value. And that's why when I look at a 10, 20, 30-year time frame on Bitcoin, I don't see 100K. I don't see 250K. I see that $657,000. I'll see you guys at the top.